I think you got to listen to what they're saying. I mean, first of all, Jamie Dimon's been saying similar for quite a long time, so I discount that a little bit. But then when you hear Brian Moynihan, who's always effervescent, talk, I don't want to say dour, but somewhat, concerned, I think you take that and sort of throw it on everything else we've heard from not only bank CEOs, but across a swath of industries. Look at the BKX, our crack staff back in EC can pull this up. I mean, we just topped out at levels we topped out at in January of 2023. So I think there's a reason technically also to be concerned. And again, when Jamie Dimon, I think it was 2.5, 3 months ago, said, I think the stock, JPMorgan was trading 202. They weren't going to buy back stock at these levels. The stock was rich. I think he was right in bringing that up. And on a price to tangible book or price to book, historically it was rich. So I think the banks, I understand why people got enthusiastic, the yield curve re-steepening, but I think it's the wrong environment to think they're off to the races.
Yeah, how do you impute this bank mosaic, Dan, onto the rest of the markets?
Yeah. Well, Mel, I was in the same camp as far as Karen was this morning, watching, JPMorgan fall off a cliff like that, at one point down 7%. I mean, you would think that something is going on, at least in the markets, maybe the economy, to see that sort of downward pressure on a market leader like that. And so it just tells me a little bit that investors were looking for an excuse to kind of move out of a very crowded trade. When I think about just what Guy said, I mean, Jamie Dimon has been somewhat subdued on the outlook for, the bank, for the economy, for the idea that rates were going to come down so hard. So I find it all a bit curious. The one thing I'll just say about some of the commentary in and around trading revenues is like, man, we finally have equity market volatility. We have currency volatility. We have commodity volatility. We have rates volatility. I don't understand how, we're going to see trading down 10% at Goldman, that sort of thing. So to me, I think it's very curious. And the last thing I'll just say, as far as net interest income, I mean, it was supposedly going to be great for these money center banks on the way up with yields. It was supposedly going to be pretty good on the way down. And it just seems like there's a chorus of folks getting cautious on that line of income. So to me, I do think it's a pretty tricky time to try, picking a bottom in some of these names.